Radio Live Sunday Business with Andrew Patterson.
It may well be destined to become the most overused business phrase of 2009. I'm talking about green shoots, which seems to be used these days with almost monotonous regularity by chief executives, economists and business commentators. There's a certain comforting factor in the phrase with both its botanical associations and its inferences of growth and renewal. But dig a little deeper, if you'll forgive the unfortunate pun, and the shoots seem to be lacking an environment that will perhaps allow them to properly develop into anything sustainable. At least that's the view of my next guest, who's just written on the aftermath of the global financial crisis in his latest article entitled GFC Cures or Placebo Effects. Sajyatdas is a risk consultant with extensive experience in the banking industry. He's also the author of the book Traders, Guns and Money, Knowns and Unknowns in the Dazzling World of Derivatives. And Sajyatdas joins us on the line now from Sydney. Welcome back to Sunday Business.
Good morning. It's good to be with you, Andrew.
Have you been surprised at the strength we've seen on the markets in this last few weeks, given that it's been more a case of the problem slowing rather than the problem dissipating?
I think fundamentally you've got to look at two separate things. One is this crisis has two dimensions. One is a financial dimension and the other is the real economy. What you're talking about when you see a recovery here, we've seen the financial markets, which is equity markets and debt markets, rally very, very significantly. And to some extent, I think one way to think about it, it's that the fear of financial Armageddon post, I suppose, the Lehman's and AIG events of October 2008 have seemed to have faded from collective memory. So under those circumstances, people are now assuming that things will go back to normal. So essentially what all the true believers in the V-shaped or U-shaped recovery are saying is that the worst is behind us and the party is just beginning, and we're hearing all those wonderful talk about a rally for the long run. I'm waiting for somebody to publish a book of Dow 30,000 or 35,000 or 40,000, which seems to happen. So I think that's the first stage that we've seen. However, if you look at the real economy continues to be mired in what is a reasonably deep recession, and there are limited signs of stabilization, but I don't think it's fair to say that we've seen a big turnaround there.
So this is a temporary fix, as it were. What do you anticipate will then be the next major hurdle that's going to perhaps upset this newfound confidence?
Well, I think fundamentally, again, you need to come back and see what is driving effectively this confidence. And I think there's a couple of factors in here. The first, obviously, is the actual stabilization in the financial system. The second, probably, is the massive, massive government stimulus, which is both in the form of government spending, but also in terms of monetary stimulus through very, very low, or in the case of Europe, Britain and North America, of zero interest rates. So if you pick each of those up in turn, the first is, if you look at the financial system overall, what has happened is we have seen substantial write-downs in the banking system, but essentially you have to be careful when you look at that. I think there are two phases in the banking system. The first is what I call the structured securities or structured investments write-downs. And to be fair, I think we've seen substantial levels of that. And this came about because of all of those wonderful three-letter acronyms like CDOs, ABS, MBS, and CDS. And we've seen massive write-downs, but there's still another cycle to come, which is the normal recessionary bad debt cycle. Interestingly enough, we've seen some of the Australian banks, which are obviously well represented in New Zealand, like the National Australia Bank and so forth, raise substantial amount of capital in the last few weeks and months. And if you actually go back to the period from 2008 onwards, they've raised huge amounts of capital. Now, given that they weren't holders of these structured securities, what that tells me is there are going to be some bad news stories emerging in terms of write-offs. And so fundamentally, the banking system, while it's been stabilized under government supervision, is not in great shape. My estimates are that when all is said and done, they're going to be short about $1 trillion to $2 trillion in capital. What that effectively means is that they will not be able to create the same level of credit in terms of lending and other types of structures that they were immediately before the crisis. And that means the overall debt level in the world will contract by 20 to 30%. And that's going to have an impact on growth. And unfortunately, there is a feedback loop here. As you don't create debt and essentially withdraw credit from the system, some companies are not going to survive, so they create more bad debts. And this is the process by which the financial system sort of contracts down to a more sustainable level. The second one we need to talk about, of course, is the governments. Now, the best way to describe the governments is that sailors, after a long cruise in town, don't spend nearly as much money as the collective Western governments are spending, and indeed the Chinese government is spending. So fundamentally, we are seeing a massive, massive amount of stimulus going into the system. And at the same time, obviously, we have almost zero interest rates. And the combined effect of that stimulus and almost the zero cost of interest has obviously given the economy essentially its little fillip. The problem here is that's a one-off. It can't be continued. And that's where I think you're going to start to see the problems emerge. Firstly, the fact that people will eventually come to the realization that the level of banking system debt creation is going to be lower going forward. And secondly, I think that the fact that the government stimulus, given the rather parlor state of most government balance sheets around the world, they can't continue to spend, and essentially that will cause the adjustment to a more realistic environment.
Yeah, writing in the Financial Times last month, one commentator summed the current situation up this way. Instead of solving the problems to generate a recovery, the political strategies have consisted of waiting for a recovery to solve the problem. The Europeans are relying on the Americans to generate growth. The Americans are relying on the Chinese, who in turn are waiting for the rest of the world to catch up to them. I mean, can a recovery emerge without solving the fundamental imbalances that currently exist, i.e., can the global economy effectively continue to muddle along? You seem to suggest not.
Well, I don't think it's possible. I think fundamentally the human condition seems now to be one of inability to actually decisively solve any problems. We're obviously seeing it on the economic front, but we're also seeing it on the climate change front. So I think fundamentally there is no political will to essentially solve this. I think the best way to describe it is that effectively we're in the world's largest Ponzi game, and the only thing the governments have learned to date is that you can't let the Ponzi game end, because if it does, it has disastrous consequences. There's a lovely, lovely cartoon that was published during the, I think it was around 2007 in the United States. There's a satirical magazine in the United States called The Onion. It demanded, when the housing bubble was coming apart, that Americans be given another bubble to invest in, because it was their constitutional right, according to The Onion. So essentially what the governments have done here is defer the problem to the maximum degree possible, given political and electoral exigencies. And essentially, if you look at what you're talking about in terms of what I would call the fundamental issues, the first is the overall level of debt has to come down. And essentially, I can't see that actually happening in the short run, because all we're seeing is a direct substitution of government debt for private sector debt. So there's overall been no deleveraging of the system to the degree that you need. The second element of this is the actual process that the governments are going through is entirely unsustainable. People have this sort of almost faith-based belief in governments when it suits them. And I think the fundamental thing is governments merely tax one sector of the economy, take the money, and then basically spend it in another sector. Or alternatively, they borrow the money from somewhere. The best way to describe them is they're very similar to a financial intermediary. The problem here is they're becoming larger and larger, and for instance, the balance sheets of central banks like the Federal Reserve or the ECB is becoming a significant factor in the market itself. That can't go on forever. And I'll give you an example of why that can't go on forever. If you actually look at a country which has, say, debt of 100% of GDP, which certainly the UK, certainly many of the European countries and the United States have. Japan, in fact, is running at well over 150%. Now, if you have that and your debt is costing you, say, for argument's sake, 5%, if your growth is only 4%, that means there's a negative gap of 1%. That automatically means that you have to shrink your spending or raise taxes to run a 1% surplus to basically keep your debt where it is. And in a world of limited liquidity and shrinking liquidity, governments are not going to be able to finance this.